Welcome, guys, to today's episode. This is Melody FS Academy, and if this is your first time of coming across this channel, please do well to subscribe to this channel, turn on the notification bell to get notified when we upload our weekly content. Okay, so if you are a first timer or a first viewer on this channel, please do well to check out our previous videos. We have a lot of content on this channel that's going to help you as a smart money trader. Okay, so I'm going to be doing a weekly outlook, and I know the first one we did, the first weekly outlook we did on this channel didn't really have much feedback. Okay, I didn't get much feedback from you guys, but I promise this is going to be a little bit different from the first one. Okay, so promise I'm going to make this worth your while. Okay, so now remember, before we proceed, these are not trade signals. Okay, these are just kind of study guide. You can compare with your own analysis, and remember, I can be wrong and you can be right, or we can have different view on the market and we can still be both, we can be right as well. Okay, so it all depends on the view you are looking at, the perspective you are looking at the market from. Okay, so this is my own perspective, this is my own opinion on the current price actions in this week. Okay, what I'm going to be looking at in this current trading week, the first week of July. Okay, so now let's get started. Now the first pair we're going to be looking at, of course, is the SRP mini SRP futures packet. Okay, so now my bias on this pair, as we know, it has always been bearish. Okay, my bias has always been bearish. Now we had the market, of course, as bearish. Okay, so as you can see, we had that breakaway fair value gap, right? We had sell side liquidity being pushed, a short low be created right here. Okay, then buy side liquidity being pushed, trading into order block. Okay, so we had this one move down. Okay, so notice we had also have this short term low, right, with sell side liquidity being pushed right here. We had this short term low, the price went below. Okay, one more time, then run on buy side liquidity. Okay, now looking at this trading range from this high to this low. Okay, this is around our equilibrium. Okay, so price just popped into the premium, trading into the last set of that candle before this up move, which is our breaker block. Okay, so this last set of that candle right here is our breaker block. Okay, so price has just traded into it. Okay, so now the big question is, whenever you pull up your chart, what's the big question you have to answer? Okay, the big question you always have to answer, to make sure you are able to answer, okay, to provide an answer to, is that where is the next draw on liquidity? Okay, if you are able to answer just that question, that alone, okay, is going to lift up, it's going to, reduce your stress to kind of 50%. Okay, it's going to up your game, it's going to sharpen your edges around the market. Okay, so you have to be able to answer the question of where is the next draw on liquidity, where is price likely to reach for? Okay, what level is price likely to reach for from where we are right now? Okay, so this is the current price action we are. Okay, this is where we are right now. Okay, so where is price likely to reach for from this level? Okay, obviously my bias is bearish, right? My bias is bearish, and as you can see, we had already traded off a breaker block, and price has shown willingness to move lower. Okay, price has shown the willingness to move lower by creating this displacement. Okay, so now here is the likelihood of price, where's the next level, where's the draw on liquidity that price is reaching for. Okay, now looking at the price action before us right here, you can see we have price has already run some buy side liquidity. Okay, this is hedging. Okay, remember we talked about hedging, I was trying to explain it in our previous video. Okay, I talked about the textbook definition of a trend, okay, and how smart money hedge the market. Okay, so we're going to look at that further in, we're also going to talk about that in the video. Okay, but this right here is a dealing range. Okay, so we had a dealing range that's already seen the sell side liquidity taken out, okay, being pushed. Now the sell side liquidity that was residing below this short term low, that has already been pushed right now. Here is our new sell side liquidity going to be resting right now. Of course, sell side liquidity has already shifted from this low to this low. Okay, so now the new sell side liquidity is going to be resting below this old low. Okay, so now we had a buy side liquidity, obviously, okay, at this old high as price ran through this old short-term low, right? So now, as you can see, we price of course trade through that buy side liquidity, okay, sucks in the buy side liquidity pools that were resting above this short-term high, okay, at the same time trading into a premium array, which is a kind of resistance institutional reference point, a breaker block. Okay, so now, and of course it trades into premium above equilibrium of this range, okay, from this high to this low. Okay, price trades above it. Okay, so this is premium into a premium array, a breaker block, right? So now price shows the willingness to go down by creating a displacement. Okay, so now the next draw on liquidity probably is this old low. Okay, price has already reached for the buy side liquidity, of course. Okay, so now we're expecting to reach for the sell side liquidity, which is this old low. So this is our next draw of liquidity. Okay, this is our next draw on liquidity. Price is going to be trying is reaching for this low. It has already traded off a premium array, and we have already seen a displacement. Okay, and meaning price has shown the willingness to go lower. Okay, and it has already taken out some buy side liquidity. Okay, so smart money has accumulated short up here. Okay, so they accumulated the shorts of the breakout traders. Okay, those that bought this on at premium. Okay, because price trading above this short-term high is seen as a short-term premium, right? So market makers have accumulated those shorts. Okay, and they are going to look for willing buyers. We are willing buyers, those that have their sell stops below here. Okay, those that are willing to sell at a discount. Okay, they are willing to sell at discount, and that is where price is drawing to right now. Okay, so this is our next draw on liquidity. So obviously we had this fair value gap. Okay, price might likely reach into that a little bit and decides to before resuming going low. Okay, so we have this fair value gap. Okay, so this imbalance, so price might likely reach into that on Monday's trading. Okay, on Monday's trading might likely see price, it might likely draw into this fair value gap, or even have a run one more time above the old high. Okay, so that's I'm going to be watching price as from on Tuesday. Okay, I'm going to see what price is going to do tomorrow, because I start trading from every Tuesday. Okay, so this fair value gap, why I outline this is that we don't try to pick tops and bottom, right? So this might not likely be the top of this retracement. Okay, so price might likely draw into this, and or probably above this old high, to accumulate more short positions. Okay, to accumulate more short positions to go down. Okay, so I'm going to be watching that, but my buyers still remain bearish. Okay, but if price decides to trade into this fair value gap, that is fine by me. Okay, I'm just going to be watching and anticipating an entry to go short below this old low, because this is probably our next draw on liquidity after seeing that run on buy side liquidity. Okay, so let's go down to let's move on to the next pair. Okay, so this is the US 30 industrial Dow Jones, or I don't know, the US 30. Okay, so it has obviously similar price actions as the what's it called, as the mini futures. Okay, these are all futures market. Okay, so of course we can see price took out buy side liquidity, sell side liquidity, created a leg, took out sell side liquidity, and we had this breakaway fair value gap, right? So price coming to the present price action, this is our current long-term dealing range. Okay, so I remember I mentioned that within long-term dealing range there are going to be short-term dealing ranges, right? So this, from this high to this low, is a dealing range. Okay, then from this high to this low is another dealing range. From this high to this low is so this is just like dealing ranges within dealing ranges. Okay, so it's more like this is why we refer to as prices being fractal. Okay, so we have long term and short term, we have even longer terms, short term. So in between, from this high down to this low, is one price leg. Okay, so in between this high and this low, we're going to have short-term dealing ranges. Okay, we're going to have short-term dealing ranges. That is just how the market is edged. Okay, that's how the market is edged. Okay, so now coming back to our current range, right? So from this high to this low, of course, you can see we have sell side, buy side liquidity being pushed right here. Okay, so price dropped down, taking our sell side liquidity, creating a short term low right here. Then we had a run one more time. Okay, so short moved from this low down to this low. Okay, when we had this run through it. Okay, so now price made an attempt towards the buy side liquidity. Okay, once we have a run on below sell side liquidity, what is actually happening is that smart money are accumulating the longs. Okay, you are buying below discount, they are buying at discount, because every move below short term low is seen as discount, right? So we accumulate at discounts and offloaded the longs here at premium. Okay, you can see, looking at the range, price traded above premium, into the premium side, trading into the mean threshold, almost reaching for that mean threshold of that breaker block. Okay, and created displacement. Okay, so now we had, of course, we had a fair value gap right here. Okay, that could be a draw on liquidity to continue going down. Okay, so this could just be a draw on liquidity, or price could just decide to just keep going down without even feeling that price, without feeling this fair value gap. Okay, so that is just my, so this is the draw on liquidities, the level I'm expecting price to being drawn to. Okay, so my bias remain bearish. I'm expecting price to be drawn to this level. Okay, of course, price can literally reach into this fair value gap and one more time have a run towards this fair value, towards this old high. Okay, remember I talked about every time we had a run on buy side liquidity in our previous video. I talked about the fact that whenever we have a run on buy side or sell side liquidity, I always like to see, price make an attempt towards this high one more time before breaking down. Okay, so that is likely, that is what is going to, price is wanting to do right now. Okay, so why is that? Why do I like see those kind of move? Because as you can see, we had this will be viewed as a retail resistance, right? So price has broken through and came back, so this is like a break and test of retail to retail support and resistance concept. Okay, so this right here, retail traders are going to be seeing that as, price resistance broken turn support. Okay, so the process of price making an attempt to reach for this fair value gap. Okay, they are going to see that as, a strong support zone and going to accumulate. They are going to be buying, so they are buying at premium, which is obviously above this old high, so they are buying at premium, and smart money is going to be accumulating those positions. Okay, so now that's why I love seeing price make this move one more time, this attempt. Okay, it can, it can go above the previous high to accumulate more. Okay, to accumulate more and decide to drop off, or it can make a failure swing, which indicates that the market is being heavily distributed, right? So this is my draw on liquidity. I'm expecting, we have already seen some buy side liquidity be taken out. Okay, being pushed, and remember we are bearish, so we are expecting a lower leg. So this is our high, our low, our lower high, and we are expecting a lower low. Okay, so now that is just, it's not that, this what I meant by hedging. This is how the market is being hedged. Okay, this was what I was trying to explain in our previous videos. Okay, notice we have from this high down to this low, right? So this, let's see, this is an old high, of course. Okay, so this is an old high, right? Or let's just start from here. This is an old high, right? Then price dropped down, created a low, right? Went up, created a short-term retracement and created a lower low, right? Then created a lower high. Okay, in textbook definition of trends, this high right here should not have gone above this short-term high. Okay, but it did anyway. So retail traders are going to be seeing that as a breakout. Okay, so they are going to buy that as a breakout. They're going to place their buy stops right there. But now what is actually happening is that smart money, the order flow is bearish, right? So they are accumulating, they are buying and selling even as the trend is going down, right? So we have this break of structure right there. We have this market broke below this old low, which was seen as a kind of support level by retail traders, right? Those that sold on stops, sell stops, that sold short as the market broke, takes out this old low, they're going to have their sell stops right now above here. Then those that were viewing this as a resistance, okay, so they were expecting a lower low, right? But price eventually went above the previous old high. Okay, so seeing these traders are going to be thinking, okay, this is a breakout, we are going to be buying on buy stops, we are going to buy to go long, that the trend has obviously changed. Okay, but what is really happening is that smart money accumulated those positions right here as the accumulated shorts right here. Okay, those that were willing to sell at discount, smart money accumulated those shorts and offloaded those long and offloaded this right here. Okay, and accumulated longs of those that were looking to buy this. Okay, so notice the market creates a low, right, and came down, creating another lower lows, create a high, okay, between this range, right, between this range, creates a high that's in between this range, in between this high and this low, right, then runs one more time below that, taking out sell side liquidity, and those traders are going to be selling this on a breakout that as a continuation pattern, right, they're going to have sell stops below this low as a continuation pattern. But notice what happens. Smart money accumulated shorts, accumulated some longs and took it above the previous high. Okay, so now they are going to be those are going to be seeing this as a breakout, right? So let's go long. They are going to go long, buy on the buy stops. But what happened? The market turns around. So this right here is hedging. Okay, so this is how a trend works. Okay, so this is how smart money traders view trends. Okay, this is how the market is being hedged. Okay, so there's no clean definition of high. The textbook definition will be a high, a low, a higher, a lower high, a lower low, of course. Then this higher high that's created will be viewed as, trend has been changed. This is a shift in market structure on the retail concept. Okay, but we as a smart money traders, we know that this, of course, is just a run on buy side liquidity to accumulate more short positions to go down. Okay, so you remember they are the liquidity providers. Okay, so they are going to have to hedge the market, they're going to have to provide liquidity, as those that we are looking to sell short, they're going to need a counterparty to, to buy from them. So smart money is going to accumulate those, and as it goes up and goes back and forth. Okay, so this is how price is being hedged back and forth. Notice we had a lower high. Okay, we had a lower high right here, a high. Okay, a lower high, we already had a low, right, and price created another leg lower, so a lower low, right, then creates the high in between this high and this low, right, and creates another lower low. Notice every time before it creates a higher high, it has to create a lower low first. Okay, it has to create a lower low first. Notice we had this high, right, and this low, then we had another lower low before it created a lower high. The pattern repeats. Okay, we have this high and this low, we have a lower high, a lower low, we have a high, right, we have another lower low before the real lower high comes. Okay, so think of it this way. Okay, before the real lower high in a downtrend comes into play, there has to be a lower low first. Okay, so the lower low have to be created first before the real lower highs comes in. Okay, so in other words, if we are bearish, as we can see right here, okay, so we have this high, this low, this lower high. Okay, so this right here, immediately this should tell us that this is not our lower high yet. Okay, so this is not our lower high yet. We should be expecting a high, a low, or sorry, a high that's going to be higher than this low as the real lower high. Okay, so now price creates another lower leg before it creates that lower low, which will make it complete. Okay, a low, a high, a lower high, then creates a low again, creates a fake high, a lower low before creating the real high to go down. Okay, so price creates a low, creates a fake high, creates a lower low before creating that real high. Okay, so now we are expecting price to do what? To create a low, a fake high, a fake lower high, a lower low, then the real high. Okay, so I hope you just get what I just said. Okay, so that is how trends work, that is how price is being hedged. Okay, so that is just something I picked up. Okay, I just picked that up and I decided to observe it in price action. I decided to share with us. Okay, so let's go down. So my drawn liquidity is probably below this old low. Okay, so probably I'm expecting price to be drawn to this towards this old low. Okay, so I'm going to go into the week having this as my target for the week. Okay, so I'm going to be bearish until price gets here. Okay, that's how you determine your bias. Okay, so look for a level that price is going to be drawn to. Okay, so until price gets to that particular level, that will be your bias. Okay, if I was bullish and I was expecting price to go above this old high, my bias is going, until price gets there, my bias is going to be bullish. Okay, so that's how you determine your daily bias. Okay, so I hope we just got that and we understood that. Okay, so let's go down further. Now this is US, the Nasdaq. Okay, so of course we have similar price action, we have that low. So looking at it one more time, we have the high, a low, right, we have a fake lower high, then we have a lower low, and we have the real higher high. Okay, so price creates that low one more time, then creates the fake lower high. The fake lower high, the real lower low, and one more time. So creates the fake lower high right here, okay, running into almost into that mean threshold. Okay, so we had the one on Nasdaq reached into that mean threshold. Okay, so we have seen that the real lower high, so we are expecting another move down. Okay, but as well, after creating this displacement, of course, we have a what's it called, we have a fair value gap, right? So now we want to see price make an attempt one more time, probably being drawn into this fair value gap to create a lower low. Okay, to create a lower leg down. Okay, so this is my drawn liquidity, this is my level that I'm expecting price to be drawn to, because this is the where CSI liquidity is going to be residing after we are taking out this low, right? So my new CSI liquidity is going to be residing below this old low. Okay, so I'm going to expect price to, of course, on Monday or Tuesday should create the high of the week in this fair value gap and expand lower. Price should be drawn to this level. Okay, of course, we have shown the willingness, we have shown displacement, the willingness to go down further. Okay, so now let's go down further, and of course we have another bearish. We have the Australian dollar. Okay, of course, I told you guys, I made mention that I was moving away from forex for the meantime. Okay, but I'm just including this. We never know, price could actually offer me something in forex market this week. Okay, so we have that high. Okay, we have a low, we have the fake high, we have a lower low, then we have another run on buy side liquidity. Okay, taking out buy side liquidity, trading into a fair value gap at the same time. So we are expecting a lower leg. So this was actually last week analysis that I did on last week analysis that I did on the Aussie dollar. There I did not trade it. Okay, so prior to this happening, I was expecting price to run below this sell side liquidity. Okay, so now of course bearish, bias is bearish, right? So now as you can see, it has already been delivered. Okay, so all I did was just to add these two bosses. Okay, this right here and this trend line. Okay, so this was something that I had on my charts, okay, last week. Okay, so this was not something new. I was expecting this, I was expecting price to go below that, but like I said, I moved away from forest in the last week, or in the past week. I moved away from forest. I didn't touch any forest pairs. Okay, I only looked at crypto market and the futures market. Okay, so now as you can see, we already reached into that sell side liquidity, right? We have taken out sell side liquidity, so there are going to be traders that are shorting the market right now on a breakout. Okay, so now my level of interest in this market is that I want to point something out. I don't know if I've made mention of this. Okay, so price, as you can see, in a downtrend, we should expect every up close candle to act as resistance. Okay, in other words, when order flow is bearish, we should expect every bearish order block to act as resistance level. Okay, so price should see every up close candle as a resistance level. Okay, so that is what I'm looking at right now. So I'm looking at price being drawn to this last previous candle as a resistance, okay, as a bearish order block. So this is a bearish order block, the last down candle before the last up close candle before this run on side liquidity. So I'm looking at price should be drawn to this. Okay, if it wants to create a wants to create a lower high, the fake lower high, of course. Okay, so price should drop to this and we should see a short-term high being formed around here, then creates that lower low, this of course will then be in that fake lower high, then runs through it, takes out buy side liquidity to continue down. Okay, of course my bias is still bearish. Okay, remember we don't pick tops at bottom. Okay, that's the rules, that's one of the rules that is very, very important in trading. Okay, you don't pick tops at bottom. You don't simply say because price has traded below this old low, price should start going up from here. Okay, no, that is wrong. Okay, you stick with the order flow, you stick with the trend. Okay, so now this of course is my drawn liquidity. I'm expecting price to reach for that and probably create that fake high and drop one more time, creating another lower leg. Okay, then run above that fake high to continue down one more time. But if we see price trades through this down candle, this up close candle, okay, the next drawn liquidity will be on this short term high. Okay, the next drawn liquidity should be on that short term high because we already had a high. Okay, this should be our low. Then between this high and this low, you can see we had short term highs. Okay, so this should be my next draw. If this order block fails to hold, then the buy side liquidity resting above this short term high is what price is literally going to reach for, okay, creating another lower high to go down. Okay, so that is just what of course this is just a speculation, right? Price is still expanding, and of course we had a new day that's already starting to form. Okay, so if price should come up and this other block holds price as a resistance as it should, then I'm going to anticipate another run one more time towards this low, because I'm sticking with my bias bearish. Okay, but if this bearish order block tends give way, okay, then I'm going to anticipate price to reach for this old high for the buy side liquidity resting above this short term high. Okay, so that will be on Aussie dollar. Let's go down for that. I don't want this video to be too long. Okay, so now of course we have a high, a low, okay, sell side liquidity being pushed, then we had that fake high right before, although it didn't create a lower high immediately, we have, okay, of course it did. Okay, so we had this high to this low, we create this short-term low, right, which is we had another short-term high in between. In fact, we had two short-term highs. Okay, and price created another lower leg, then runs up one more time, taking out the buy side liquidity, right, and creates another leg. Then notice it creates that leg, creates that fake high, fake lower high. Okay, so in between every trading range there's going to always be a fake lower high for liquidity run. Okay, so that's something you should jot, that's something you should back test for test going forward from today. Okay, so between every trading range high and low there's going to always be a fake lower high if the bias is bearish. Okay, then if the bias is bullish there's going to be always be a fake lower low, is it higher high, higher low. Okay, something like that. Okay, this thing gets confusing sometimes. Okay, but I hope you guys get what I'm trying to say. Okay, so we had a run on sell side liquidity, a run on buy side liquidity, creating that lower high, right? Then we have price being respected. Here you can see we had relatively equal lows, so this was like engineered liquidity support, rotate support idea. Okay, so price broke down and came up into a previous fair value gap. Okay, so looking at this range, from this range, because this is the most swing high that broke this low. Okay, so looking at the range from this high to this low, this is above premium. Okay, this is above premium. Price has already closed in the fair value gap completely. So where is my next draw on liquidity right now? My bias is bearish. Okay, so I'm expecting liquidity to price to reach for the sell side liquidity resting below here, because we are already seeing a run on buy side liquidity right here. So I'm expecting price to be drawn to this sell side liquidity, although it made an attempt once but didn't go below that, came back up and now is making another attempt. Okay, so I'm expecting price to run at these relatively equal lows, the buy side the sell side liquidity resting below them. Okay, so that's my bias. Okay, so I'm bearish until price takes out this old low, short term low. Okay, relatively equal lows. Okay, that will be all on Euro USD. This is Euro USD. Okay, looking at the British pounds, against the US dollar. Okay, so we had a run down. Okay, we had a high, a low, creates that fake high. Okay, we have a lower low, runs above the fake high to grab buy side liquidity, and of course we have already seen sell side liquidity being run at. Okay, so now this is price creating that between this range. Notice between this range we have price right here. Okay, and you can use this high or that. So this is the most recent one, so I'm going to use this one. So between this high and this low, price has already created that fake high, right? Price has already created that fake high, and notice how it made an attempt to go below the real lower low, but it fell short. Okay, it rejected off immediately. Okay, so the idea is that I'm expecting price to run into this fair value gap, or probably, if possible, it should be drawn above this old high. Okay, so this is the most recent swing high, right? So price should be drawn above that, but I'm looking at price reaching into that fair value gap. Okay, so to create a lower leg. Okay, so if it wants to reach, if it trace through if it trace through this fair value gap, it should be drawn to this or that. Okay, so but my bias still remain bearish. Okay, so I'm expecting price to reach for that, of course. Okay, we have equal highs of from the previous days. Okay, from last week, right? So this should be enough liquidity for it to continue going down. But that will be my draw. So my draw liquidity is obviously this. I'm having this level in mind, but I'm expecting, price could literally expand up to reach for this fair, to that into this fair value gap and create that new leg. Okay, it doesn't matter, but my bias is still very bearish. Okay, so now we have the New Zealand dollar. Okay, so we have price runs down, creates a short-term low, creates a high, that fake high, creates a lower leg, runs above the fake high to take out buy side liquidity, and moves almost immediately to take out sell side liquidity. So we have another fake high right here. Okay, so we have multiple highs. Okay, we have multiple highs, multiple fake highs created here. Okay, so now the price has taken out, created the real lower leg, price has created the lower low. So my obviously taking out sell side liquidity, accumulated some longs. Okay, so I'm expecting price to be drawn to this fair value gap, and the most reasonable level it should be drawn to should be this old high. Okay, this short-term high, for that to take out the fake lower high. Okay, price could just be drawn to that to create that fake lower, the real lower high, and drops. Okay, so it should be drawn to this fair value gap, and possibly, if possible, if it keeps expanding higher, if it decides to take out this, remember where I made mention of the bearish order block acting as resistance, right? So if price decides to take out this bearish order block, it's going to reach for that hold high and drop. Okay, so my bias still remain bearish, and we have already accumulated some short, we have already accumulated, taking our sell side liquidity, right? The next level it should probably reach for is buy side liquidity, which is above this short-term high. So this is the most recent high that has the buy side liquidity above it right now. Okay, so that is why I'm going to watch this level. If price should makes attempt of trying to reach for that, my bias is going to be bullish. Although I'm bearish, but I'm going to have a bullish bias until price gets into that and probably reach into above that. Okay, so that is just what I'm going to be looking at on this New Zealand dollar. Okay, so we have the dollar yen. Okay, so we have dollar yen, which is obviously bullish. Okay, so we have a bullish trend, and let's see, we have a high, a low, sorry, to a high, creates a lower low, a higher low, creates another higher high, then creates another higher low. So this of course will be our fake low. Okay, so because price creates a high, and until price creates a higher high, before it has to, remember, it has to create a higher high before taking out what's it called, taking out the fake low. Okay, so obviously my drawn liquidity from where we are right now, although we are very much bullish, but price should probably reach for this sell side liquidity resting below this short term low. Okay, because we are already taking out buy side liquidity, so price will reach for that short term low, and this last up close candle should act as a support. Okay, in uptrend, in a bullish trend, the down close candle should act as support, while in a bearish trend the up close candle should act as resistance. Okay, so price should find support while taking out this short term low, find support in this bullish order block. Okay, from the opening, draw that in time, price will find support at that while taking out the short term low, which would be of course sell side liquidity. Okay, so sell side liquidity moved from here to here as it takes out the buy side liquidity. Okay, so my drawn liquidity will be below this old low to continue going up. Okay, so until price reach there I will be bearish, and when price gets to this particular order block, then I'm going to move to the sideline and observe and see if price is going to show the willingness to want to move away from that by creating some sort of displacement. Okay, so I'm going to watch that. So this is what I'm going to be doing on the Aussie, the dollar yen. Okay, so this is the card Canadian dollar. Okay, so of course this is my last week analysis. Okay, this last week analysis I was expecting we are bullish, right? But something struck me right here. Okay, so notice we had equal highs, although not really equal. This candle, this high is a bit higher than this one. Okay, so that's obviously buy side liquidity being pushed right there. Okay, so now we had this short term low, right, and of course we had a run above this short term high as well. Okay, so two buy side liquidity were being pushed right here. So we had breaker traders right here and breaker traders right there. Okay, so now the market, notice the market retraced, they made an attempt to go up, okay, to trade higher or to trade up, okay, but failed, okay, but failed and broke down, okay, so creating this displacement. So I was looking at that last week. I was looking at this short, this fair value gap, right, and I was still looking at the liquidity resting below this as, you know, routine support level. So I was anticipating price to reach for that and probably go up into that fair value gap. Okay, so that was what I was looking at last week. Okay, so although we are bearish, but something is off right here. Okay, so we had a price that fails to go above the previous high. We have a high that fails to go above the previous high. So what this indicates is the market is being heavily distributed, right? This is a failure swing. The market is being heavily distributed. Okay, so now notice how this bearish order block head price. Okay, notice the rejection, the immediate feedback we had from this from the bullish order block after completely filling in the fair value gap. Okay, so at the same time, while price took out this low trading into this fair value gap, we had a short term low that was being formed here. Okay, then notice we also had a short-term high that was formed here. So buy side liquidity was being pushed right here. So buy side liquidity has been pushed. Okay, so where is the next probably level for price to be drawn to? Is sell side liquidity. Okay, because this is where this is a short-term low, right? So price should be drawn to that. And as you can see, with this rejection that we have from this bearish order block, okay, I'm thinking price, the trend has changed. Okay, the underlying trend might have changed. Okay, because price in, like we said, in a downtrend bearish order block, up close candles should hold price, hold price as resistance level. Okay, so now we have run on buy side liquidity. Okay, the next run liquidity will be on the sell side liquidity. Okay, so I'm expecting price to create a lower low, run towards this liquidity and into that fair value gap. Okay, so that's just going to be that will be enough for me if I can see price make an attempt towards this low, okay, and probably into this fair value gap. That will be enough for me, and I'll be done with this pair for the week and wait for the following week to see what is going to, what price is wanting to draw to next. Okay, but we still have this relative equal highs here. Okay, so although we had a little peak above this high, that is still a sensitive area, so liquidity is going to be resting above that. So price, remember, price don't like seeing this kind of levels. Okay, this kind of clean highs, price is going to always run towards them. Okay, so although we are having a failure swing, okay, we are having a failure swing, it might just be kind of retracement to, to what's it called, to reach for this fair value gap. Okay, to reach for this fair value gap and continue going up. Okay, so but for this week my bias is going to be to look for price to go below this old low and probably into this fair value gap. So that will be bearish, a short-term bearish bias. Okay, then once I have this accomplished, I'm going to move to the sidelines and observe further price action. Okay, so going down into the Australian dollar against the Japanese yen. Okay, so this my bias is bearish on this pair. Okay, my bias is bearish. Why am I bearish on this pair? The fact that we had a run, we had a high, a low, consolidated, then we had a run on buy side liquidity right here. Okay, then price came down and took out sell side liquidity. Okay, then notice we had that fake lower high, then we had price create a lower low first, then went up and took out buy side liquidity. Okay, so this is not just taking out that fake lower high, it also took out the major high. So price run buy side liquidity, and as price move from this level, from down here, from this low to this high, where is buy side liquidity going to be resting? Sorry, sell side liquidity below this old low. Okay, so now we already see some run on buy side liquidity, right? And price showed the willingness to move from this created displacement. So as you can see, this price has already traded back up into a fair value gap. Okay, so now we have already reached below discount, into discount. Okay, we dipped down a little bit into discount, taking out a short-term low, which is sell side liquidity, right? So now the price has already tapped into some short-term low, some short sell side liquidity. Where is the next level price is likely going to be drawn to? Okay, that is going to be above this old high. That's buy side liquidity. buy side liquidity is going to be resting above this old high. So I would like to see price make an attempt to reach for the buy side liquidity resting above this old high. Okay, so we have already run into some sell side liquidity, right? So the next level for it to drop to be drawn to is above this old high, or probably into this mitigation block. It might not reach, might not more likely reach for that old high. It might just reach into this mitigation block, the last down candle before this short term rally up, and continue going down. So I'm just going to be cautious on this. Okay, so until price reach into this mitigation block, I might buy into that mitigation block, look for a long into this mitigation block, and move to the set lines and see if price is willing to expand even further up into that old high. Okay, it might just move into the rejection block, it might just move above the bodies of this candle and resume going down, but my bias is bearish on this pair. Okay, so I'm going to be looking for bearishness, I'm going to be looking for sell. Okay, so you already know what that means. Okay, so I'm going to be looking for sell, and my target is going to be this old high. I have this old low as an ultimate target, right? But we still have short-term lows in between. Okay, so those are going to be primary targets, and this is my ultimate target, my overall target. Okay, so going down, I don't want this video to be too long, and which is obviously is right now. Okay, so we have a high, a low, high, price runs down one more time to sell side liquidity, and we're expecting it to reach for buy. Yes, buy side liquidity going to be residing now above this old high, right? Obviously we are bullish. Okay, we are bullish. So price went above this previous high, taking out buy side liquidity, creates a high, came down into a previous fair value gap, right? So from this low to this high, that's below equity. The midpoint should be around this level. Okay, so price trades off a fair value gap, came back and respected that old high, failed to go above the old high, came back once again, failed to go above this old high one more time. Okay, so now my bias is very bullish on this pair. Okay, so we have seen price move from some level of discount. Okay, price was bought up at this fair value gap, but failed to, so this is liquidity being engineered. This is a kind of resistance level being engineered right here. Okay, so now price trades below this old low. So this is price going below and a previous old low, a previous short-term low, which is short-term discount, right? At the same time trading into a fair value gap, and at the same time trading into another block. See, what do we say when we are in an uptrend? What should down close be seen at? Okay, so every down close should be seen as a should support price. Okay, should be seen as a support level for price. Okay, should provide support in uptrend markets. So down close candles in uptrend markets should provide support, right? So price trades down into it right here. Notice how the body's respect hits the other block, starts from the open, right? So price trades down, hits that open, and reacted off immediately. So my next drawn liquidity is I'm expecting price to create a higher leg up, make an attempt to run towards these equal highs right here. Okay, so my bias is bullish, of course. Okay, so I'm expecting price. Notice we have these short-term lows that price ran below, so that's short-term discount into a fair value gap into another block. Okay, so I'm expecting price to create, to make an attempt towards that. So that would be my bias will be bullish. Of course, other flow is bullish, right? So I'm expecting price to make a run. The next drawn liquidity is probably towards these highs. Okay, let's see. So that's going to be my bias for the week on this pair. Okay, so New Zealand dollar, okay, so we have buy side liquidity being run out right here. Price dropped, so my bias is bearish on this pair. Okay, so why bearish? Price dropped aggressively. Okay, created a kind of short-term lows, short-term high, sorry, went down, came back above that above those short-term highs into a level of premium, fair value gap. Look at the range. Okay, so now takes out buy side liquidity, this short-term high, buy side liquidity, makes an attempt, runs lower into a fair value gap in the discount side, was bought up one more time, up, but failed to go above this short-term high. So that's a failure swing, right? So we had a failure swing, and price made a run one more time and showed the willingness to go down. Okay, so we had this short-term low be formed right here. So this is sell side liquidity being taken out. Okay, so price has taken our sell side liquidity, and if we are bearish, right, we are anticipating price to reach for below this old low, this low, this low and ultimately this low. Okay, so I'm bearish on this pair, so my draw on liquidity is to see price reach for this low or this low. Okay, so that's my draw on liquidity. But for price to be hedged successfully, we have to see some buying and selling. Okay, now of course you can see we already have price run into some sell side liquidity. Some sell side liquidity has been taken out, right? So now we have price should make an attempt to accumulate more shorts. So the next level that price should be drawn to is this short term. This is the most recent short term high, right? So price has already created a lower low. So I'm seeing this, I'm viewing this as that fake lower high. Okay, so and of course we have a bullish order block, so this should provide resistance for price. So price should make an attempt to run towards that, above that old high, to continue going down, or of course it can just keep expanding lower. Okay, so I'm not forcing price to that price must retrace. I'm just giving the probability, the possibility of it wanting to reach back up into some level of short-term premium. Okay, of course we are in a premium environment, okay, but you should reach for some level of short-term premium and continue going down. Okay, price could just reach for this high, and that will just be enough for it to continue going down. But this is my drawn liquidity. This is the level I'm expecting price to be drawn to, this short-term low and this short-term lows right here, ultimately this short-term low. Okay, we have already seen the run on buy side liquidity, so this is my ultimate target. I'm expecting price to be drawn to this low right here. Okay, so my bias is bearish. I'm expecting price to reach for this low and that low. Okay, but if it wants to for it to be hedged properly, if I'm a market maker, what I'm going to drive price above this old high to go down into this bullish order block, bearish order block right there. Okay, so that is just my opinion on this pair. Okay, we have the GBP Okay, price runs above an old high, takes out buy side liquidity right there, takes out sell side liquidity right here. Okay, so makes a run one more time, clearing out uh taking out these short-term highs in between. Okay, so went back to take out buy side liquidity. Okay, so there are going to be times we're going to have situation like this where price is not really going to reach for that fake short-term high, but it's going to reach for that overall high itself. Okay, that intermediate high. So these are short-term highs, and I'm viewing this as an intermediate term high, right? So price is not only going to reach for the short-term highs, but it's likely going to reach for the intermediate term highs. So now we have already seen some buy side liquidity being taken out, right? So price drops aggressively into a bullish order block, then was bought up one more time. Price was bought up one more time. Okay, then made a failure swing, failed to go above this previous high and dropped again. Okay, so this is SI liquidity be taken out, so I'm expecting price to be drawn to this liquidity area. Okay, so price should be drawn to this and automatically this. Okay, so I'm watching this overall set side liquidity. Okay, then one more time it should make an attempt to go up into above this short-term high. That would be viewed as short-term premium to accumulate. It has already accumulated some longs because this is a short-term low and a premium right here and a fair value gap right there. Okay, so if I'm a market maker right now, what I would do would be to drive price above this old high and to resume going down. Okay, so remember we said price goes down to go up. Okay, so below this short-term low some longs have been accumulated. Okay, so price might just likely keep expanding lower. Okay, but I'm just giving the room, I'm just giving the possibility of it wanting to reach back for this old high, but this is my drawn liquidity, this low right here. So my bias is bearish. Okay, my bias is bearish. I'm looking for a run towards this short-term low. Okay, so okay, we have the card, the GBP card. Okay, now we have obviously a run on buy side liquidity, sell side liquidity. We have price trades off into a fair value gap, creates a high, a low, a fake high, creates that lower low, then ultimately creates that real lower high, and you can see price show displacement right here. Okay, so this is my drawn liquidity. I'm expecting price to go below this old low right here. So this is my drawn liquidity, and price could reach for this fair value gap, reach up into that value gap, taking out this short-term low. Okay, taking out this short-term low filling that gap and continue going before resuming his movement downwards. Okay, so my bias is bearish and I'm expecting price to be drawn to this. Okay, so it could just make a run up one more time into this fair value gap above this previous day's high and resume going down. Okay, so this is my draw on liquidity. This is where I'm expecting price to be drawn to. It has already shown the willingness to go down. We are taking out buy side liquidity, so it makes sense for us to reach for sell side liquidity, trade off into a fair value gap. Okay, and price has been trading down. Okay, has been bearish. That's the trend, has been bearish. Okay, so now obviously I included the EBITDA range in this example because I was prior to this I was looking for this run on. Remember we talked about price seeking for the 60 days, the liquidity below that low, right? As price was going up, uh price go to one way or the other start seeking for liquidity below the 60 days low. Okay, the lowest low in the last 60 days, last 40 days, and the last 20 trading days. Okay, if price have been bullish in the previous 60 days, okay, as price trades up, there are going to be liquidity resting below the old lows. Okay, so ultimately you can see we have price reached into that low already. So price has traded into that 60 days trading range, EBITDA range low. Okay, so price has drawn in sell side liquidity, right? And I'm still very bearish, but as you can see we have already traded into the sell side liquidity, tapped in sell side liquidity. Okay, so a potential short term high has been formed right here. Okay, so what I would like to see is that I want to see price being drawn to this fair value gap. Okay, and into these other blocks. Okay, these last two candles, and this should be a fake high. Okay, this could be our fake high. Okay, but price has to trade down first, right? So it could possibly be drawn into that fair value gap to create that fake high. Okay, so this could be price reaching for this fair value gap and creating a lower low for the fake high and ultimately running above that fake high. Okay, so what I want price to do, as price has already reached for the sell side liquidity, there's going to be buy side liquidity resting above this short term high. Okay, so price is going to trade through that into this imbalance and resume and run one more time, even further downwards into draw into this old low. Okay, so price, I want to see price run into that and create a displacement and reach for the buy side liquidity that's going to be leaving, or sorry, the sell side liquidity that's going to be leaving below this old low. Okay, so this is the end of the weekly market outlook. Okay, so I'm expecting feedback from you guys on what you think if we should continue this series. Okay, so if you have any other question, you have pairs that you want us to analyze together, always remember our Telegram group link is attached uh to the description box. Okay, so click on the description box to join our Telegram group, and we'll see you guys in the next episode. Please, if you like our content, you appreciate our effort on putting out this content, and you have not subscribed to this channel, if you're a first time, a returning viewer, but yet to subscribe, please kindly click on that subscription button, right? Turn on the notification bell to get notified. It's free and it's not going to take much of your time. Okay, I apologize for this video for being too long. I really want it to be this too long, so I apologize. Okay, so you guys have a great trading week ahead, and I'll hopefully see you guys in our next video.